Cryptocurrencies enable you to purchase goods and services, as well as trade them for profit. Here's additional information on cryptocurrency, including how to buy it and protect yourself. Here is understanding cryptocurrencies and how they work. A cryptocurrency is a digital currency that may be used to purchase goods and services, but it employs an online ledger and powerful cryptograph to safeguard online transactions. Much of the interest in this unregulated currency is speculative, with speculators setting values high at times. Bitcoin, the most popular cryptocurrency, has experienced wild price movements this year, reaching nearly $65,000 in April before falling by nearly half in May. Bitcoin's price has just returned to the $45,000 area. Here are some questions to ask regarding cryptocurrencies, as well as some of the red flags to look out for. Number 1, what exactly is cryptocurrency? Cryptocurrency is a type of payment that may be exchanged for products and services online. Many businesses have created their own currencies, known as tokens, which can be exchanged for the goods or services that the business offers. Consider them to arcade tokens or casino chips to have access to the good or service. You must first swap actual dollars for cryptocurrency. Cryptocurrency operate on the blockchain technology. Blockchain is decentralized technology that handles and records transactions across numerous computers. The security of this technology is part of its allure. Number 2, how many cryptocurrencies exist? How much are they worth? According to the coinmarketcap.com, a market research website, over 10,000 different cryptocurrencies are publicly traded, and cryptocurrencies continue to proliferate, with initial coin offerings, or ICOs, used to raise funds. According to the CoinMarketCap, the total value of all cryptocurrencies on August 18, 2021 was more than $1.9 trillion, a decrease from April high of $2.2 trillion. The entire value of all Bitcoins, the most popular digital currency, was estimated to be at $849 billion, reclaiming ground for the recent lows. Nonetheless, Bitcoin's market value has fallen from a high of $1.2 trillion in April. The top cryptocurrencies in terms of market capitalizations. According to CoinMarketCap, a cryptocurrency statistic and analytics firm, they are the top 10 trading cryptocurrencies in terms of market capitalization. Number 1, Bitcoin. Number 2, Ethereum. Number 3, Binance Coin. Number 4, Tether. Number 5, Cardano. Number 6, XRP. Number 7, Dogecoin. Number 8, USD Coin. Number 9, Polkadot. And number 10, Solana. Number 3, what is the appeal of cryptocurrencies? Cryptocurrencies have a wide range of supporters for a variety of reasons. Here are a few of them most well known. Cryptocurrencies such as Bitcoin are seen as the currency of the future, and supporters are rushing to purchase them now, presumably before they become more valuable. Some proponents prefer the idea that Bitcoin removes central banks from managing the money supply, because these banks tend to devalue money over time through inflation. Others that blockchain technology that underpins cryptocurrencies because it has a decentralized processing and recording system that can be more secure than traditional payment systems. Some speculators prefer cryptocurrencies because their value is rising, but they are uninterested in the currency's long-term adoption as a means of transferring funds. Number 4, is it a smart idea to invest in cryptocurrencies? Cryptocurrencies may appreciate in value, but many investors regarding them as a speculative investment rather than an actual investment. What's the reason? Cryptocurrency, like real currency, create no cash flow. Therefore, in order for you to profit, someone else may pay more for the currency than you did. This is known as greater fool investment theory. In contrast, a well-managed business raises its value over time by increasing its profitability and cash flow. Some prominent voices in the investment sector have encouraged would-be investors to avoid them, notably famed investor Warren Buffett compared Bitcoin to paper checks, saying it's a relatively effective way to move money, and you can do it anonymously and all that. A check is another method of transferring money. Is a check worth a lot of money just because it can send money? Those who believe that cryptocurrencies such as Bitcoin will be the currency of the future should be aware that the currency requires stability in order for merchants and customers to establish what a fair price is for items. Throughout much of their history, Bitcoin and other cryptocurrency have been everything but stable. For example, when Bitcoin was trading near $20,000 in December 2017, its value sank to around $3,200 a year later. By December 2020, it was trading at all-time highs once more. Price volatility poses a quandary. Even if Bitcoins become far more valuable in the future, people are less inclined to spend and circulate them today, making them less viable as a currency. Why spend a Bitcoin when you could be worth 3 times its current value in a year's time? Number 5, how can I purchase cryptocurrency? While certain cryptocurrencies such as Bitcoin can be purchased using US dollars, others require payments in Bitcoins or other currency. To purchase a cryptocurrency, you will need a wallet, which has an internet app that stores your currency. In general, you open an account in exchange and then use real money to purchase cryptocurrencies such as Bitcoin or Ether. Here's additional information on how to invest in Bitcoin. Coinbase is a well-known cryptocurrency trading exchange where you can build a wallet as well as purchase and sell Bitcoin and other cryptocurrencies. In addition, a rising number of online brokers such as eToro, TradeStation, and Sophie Active Investing offer cryptocurrency. Free cryptocurrency transactions are available through Robinhood. Number 6. Cryptocurrencies. Are they legal? There is no doubt that they are lawful in the United States. However, China has effectively prohibited their use, and whether the legal ultimately depends on each individual country. Consider how to protect yourself from fraudsters to see cryptocurrencies as a way to defraud investors. Buyer beware, as always. Number 7. How can I safeguard myself? If you want to invest in cryptocurrency through the ICO, examine the fine print in the company's prospectus for the following information. Who is the company's owner? A recognizable and well-known owner is a good sign. Is it being backed by any large investors? If other well-known investors want a piece of the currency, it's a good indicator. Will you have a share in the firm, or will it only have currency or tokens? This distinction is critical. Owning a stake means you get to share in its profits. You're an owner. Whereas purchasing tokens just means that you have the right to use them, like chips in a casino. Is the currency already created, or is the company looking to raise funds to create it? The further along the product, the lower the risk. It can be time-consuming to shift your prospectus. The more detail it contains, the more likely it is authentic. However, even legitimacy does not guarantee the currency's success. That is a very other subject, and it necessitates a great deal of market knowledge. Beyond those issues, simply owning Bitcoin exposes you to the danger of theft as hackers attempt to breach computer networks that store your asset. In 2014, a well-known exchange filed bankruptcy after hackers stole hundreds of millions of dollars in Bitcoins. These are not usual hazards associated with investing in stocks and mutual funds on major U.S. markets. Advantage and disadvantage of cryptocurrency. Advantages. Cryptocurrencies carry the promise of making it easier to move funds between two parties without the requirement for a trusted third party, such as a bank or credit card provider. Instead, these transfers are protected by the use of public and private keys, as well as other incentive schemes, like proof of work or proof of stake. A user's wallet or account address in modern cryptocurrency systems has a public key, while the private key is known only to the owner and is used to sign transactions. Fundamental transactions are handled with minimal processing fees, allowing customers to avoid the high wire transfer fees paid by banks and financial organizations. Disadvantages. Bitcoin transactions are semi-anonymous. They are ideal for a variety of criminal activities such as money laundering and tax evasion. However, cryptocurrency enthusiasts frequently emphasize for the need of anonymity, claiming benefits like security for whistleblowers or activists living under repressive governments. Some cryptocurrencies have a higher level of privacy than others, because forensic analysis of the Bitcoin blockchain has assisted authorities in arresting and prosecuting criminals. Bitcoin is a relatively poor choice for doing illegal businesses online. However, additional privacy-oriented coins exist such as Dash, Monero, and Zcash, which are all even more difficult to trace. Should you buy cryptocurrency? Cryptocurrency is a highly speculative and volatile investment. Investing in establishing firm stocks is often less hazardous than investing in cryptocurrencies like Bitcoin. So what do you think about understanding cryptocurrencies and how they work? Let us know in the comment section below. Thanks for watching. See you in the next video.